What I'm going to do is I'm going to start off by saying tomorrow morning we're going to be running a live room. We've got several hundred traders that come in there every morning on Wednesdays and Thursdays. We've got a very active trade room. Some of you guys may or may not be using the platform that we trade on. We understand that. You may be an options trader, a Forex trader, a stock trader, a futures trader, regardless of where you've been or where you are right now. What we're going to do today is we're going to talk about order flow analysis through the SD Volume Zone software. It's one of our flagship products. And what it's really about is coming in and watching an environment where we actually do break down multi-asset commentary in the real time. I'm not sure how many of you guys are active day traders or not, but tomorrow's room is a day trading room. And we do trade in there in an education environment. So what we'll do is we will walk through trades. We will participate in an environment that allows for learning and also interaction. And we've got one of the largest rooms in the NinjaTrader ecosystem. NinjaTrader is our primary platform. How many of you guys in here are actually using NinjaTrader right now? Can you guys give me a Y in the chat box if any of you guys are using NinjaTrader or not? If you're not using it, that's not a problem. What's really good about it is it's actually free to use in a demo environment. So even if you are interested in some of the concepts that we show you today, you'll be able to get things up and running and be able to take a look at some of the stuff that we do just to see how it works and what we actually do from a trading perspective. So if you go to goldenzonetrading.com, you can just register. Let us know if you're a futures Forex stock trader, if you day trade or you swing trade the markets. It gives us a little bit of insight as to who you are and what you look at. One thing I do want to point out here is that we've got a lot of videos with regards to application. And one of the things that I've learned over the years in working with traders is that we learn by seeing and we learn by doing, not so much by hearing. Hearing gives us that initial theory, which I think is very important. But what we want to do is we want to make sure that you can see it done in front of you. You can actually watch it happen so that it really makes sense. So I'm going to be putting some links in the chat box right now. Actually, give me a second. I'm going to put this over to the entire audience. I'm going to go back and actually start that over. So let me just do this and just put the link in the actual audience environment so you guys can see it. Can you guys see the links that I'm putting in there now? There's the first one. I'm going to put the recap video. These are trade room recaps where we do commentary after what's taking place in the market. And we put them up periodically depending on our schedule and our time commitments here. One of the things too is there's some live money trades. These are live money trades for me trading live accounts. You can see that there. And most importantly, what we've done in the past is we've done extensive interviews of our traders that actually trade our full strategies, that go through our training programs. And as the previous moderator just mentioned, it's really good to be able to hear the perspectives of other people. Anybody can write a testimonial on a website and anybody can tell you what it is and what we do. We're here providing services and obviously our companies benefit from revenue generation from those services. But in order for you to actually buy into the aspect of how we trade and the tools that we use, I think it's really more important to listen to other traders that have been where you are or actually in the same position as you right now. And so what I'd like to do is just give you those links. Let me know if you guys got all of them. I'm going to move this out of the way for a second. We're going to get us over into the actual presentation, and I am filming this. I believe the hosts of today's event are also filming this, but for the most part, we're gonna be able to provide a recording after this event as well. Should you want to go back and watch it and learn from that environment. So quickly, I just want to touch base that we are specializing in order flow and volume analysis. And there's many different ways to trade order flow and volume. We use supply and demand analysis bridged with volume profile concepts. We also look at many different aspects of order flow analysis, momentum analysis, divergence trading, directional and counter-directional strategies. In fact, what we do is we specialize in providing opportunity in dynamic conditions. So the difference with what we do is a lot of traders start with trading trend strategies or they trade momentum strategies, and they have a time and a place where their systems actually work. But what we do is we provide opportunities to engage in the market when the right time to engage in those types of strategies are. So if the market's trending, we have trend strategies. If the market's oscillating, we have oscillating strategies. And in order to do that, we need to have tools to make our analysis completely more objective rather than being a reactive trader. We always view it from being a proactive trader. And so we're going to talk about the SD volume zones because in my opinion, it's one of the most Advanced ways to keep things simple. I know that's kind of a pun on words or a play on words, but what we're going to do is we're going to walk you through how to plan a trade out in advance. We're going to walk you through step by step, bar by bar, what it looks like to get ready to take a trade, where to place the entries, where to place the stops, and how you can look at dynamically reducing the ticks in stops. If you're a trader that's, from a day trading perspective, 3 or 4 ticks is a big deal. Maybe not for a big longer term investor or a swing trader, it's much more open-ended, but if you're day trading the market, whether you're scalping or you're day trading, it's really important to understand how to reduce your stop sizes when it's necessary, when it's important to keep a bigger stop. Also being able to use volume profile to really hone into an area of supply and demand, because a lot of times traders have a good concept around entry and exit, but sometimes people don't really understand how to use volume to tell them where the market should be doing what it's doing. And so we're going to do that with supply and demand analysis today using the zoning software we trade with. And hopefully you guys can see the benefit of it. And if you guys are interested in afterwards, we can always set up discussions, or we can communicate via email. So I need to cover a quick disclaimer. Obviously, it's important to understand the risks in trading. I'm not a CTA, I'm not your broker or your advisor, but we do provide educational and training environments geared towards what we do with our software, as well as many different concepts around education, risk and money management, and so forth. Results are always important, guys. Everybody wants to know, show me the results, show me the statistics. Well, we take it a little step further. I'll show you some behind the scenes looks at some of the things we do at a high level. Excuse me, and we use these tools in conjunction with some of the other software that we trade with, so you'll be able to identify that. But if we do look at stats today, if we do look at performance reports or anything like that, please note that these are historical performance resorts. These are not future guarantees, right? We have to understand the risks involved in trading. So that being said, yes, we will be doing aspects on Forex as well. We'll be able to look at Forex, futures, and stocks, and we'll talk about that in just a moment. So quick breakdown. I want to spend more time on the examples and the charts than I do in the slides. I think that we learn more from the use of tools rather than the talking of tools. I want to quickly explain why I'm qualified to be here. Look at order flow and volume made easy. I think that's the key word, how to make this easy. Who in here finds that we understand that we need to learn things, but you find it's overwhelming? There's a myriad of information. There's so many webinars, there's so many events, and they're all beneficial, but we need to pick and choose where we want to direct our attention. Who in here finds that even with the overload of information, you still find it's hard to learn how to trade? You guys want to just kind of be dynamic with me? Let me know. Give me a why if you feel that you're in a struggling situation, or you're in a position where you've made a decision, okay, it's time to make a change. I'm going to start committing to a different way because what I'm doing may not be working for me. Now, if you're in that environment, trust me, I've been there. Okay, Brian says yes. I don't know if Brian's the only one. We got a lot more people in here, but I'm assuming that you kind of want to see things done first, which we'll go into. So the SD volume zones gives us a way to take order flow analysis and volume analysis and make it extremely user-friendly, if you will, because at the end of the day, if we're fighting technology, then we're fighting analysis. So what we've done from a UI perspective is we've designed software to take extremely complex algorithms and make them visually appealing so that we don't have to make it hard to trade in the market. Yes, it does involve skill, and yes, it does prevent, basically puts difficulties in the market where we need to be able to act on our feet, and we all know that we can't control the hard right edge, but if we can control our analysis before that happens, then we're much further ahead of a lot of other people we trade against, right? So we're going to give you a mini trading plan. In fact, today I'm going to walk you through the exact 4-step trading plan that I use in our trading room. If you come tomorrow morning, I would suggest if you're going to go anywhere this week, you want to be in that room tomorrow, and I'll tell you why. Because I'm going to walk you through how to really fine-tune your analysis in a way that I would assume most of you guys didn't even know is even available. And so with that being said, our tools, our application can be used stocks, futures, Forex. Most importantly, if you're a day trader, excellent. If you're an interest swing day trader, perfect. If you're a swing in position, a longer term investor, excellent. If you trade options, you can use our tools on the equity charts, and then you can do your analysis on other platforms. A good example, we had some traders contact us not too long ago. They trade on Thinkorswim, they trade on TradeStation, they trade on all these other charts, but they want to use our tools to break down analysis. Well, we have a lot of traders that just take advantage of our software on the demo accounts inside a NinjaTrader, and they don't even use NinjaTrader to execute trades. And I'll explain why that's beneficial. You might not be a day trader, yet we run a day trading room, but our tools help you understand how to pick the right options because of where we're trading in the market. Or if you're an end of day trader and you trade the equities markets, you're managing an IRA account or an RSP if you're Canadian, it means no different. I'm going to show you how to take this information, and you can basically manipulate it to use it based off the trader that you are. So I'm not going to sit here and tell you you must trade this way to become successful, because that's not effective. I think that if you're a scalper, excellent, we'll show you how to scalp. If you're a day trader, no problem, swing investor, we've got the tools for you. But most importantly, the free trial to the trading room is really there to give you a breakdown of watching us in a very large environment, communicating, demonstrating, talking about theory and concepts so that you can actually understand it in context, right? So quickly, my name is Sean Kozak. I'm the owner of Golden Zone Trading. I don't believe in fluff, snake oil, or subjectivity. If you want to speak to me or one of my traders, I'll get you on the phone with them. I've got a list of phone numbers, and I've got a lot of traders that, by all means, they're willing to get out of their way and share what they've learned and how they've done with us, because we've had many traders that have gone through the rat race and they're sick and tired of being sick and tired. And no offense, I mean, who wouldn't be after you get beaten up by the markets for a while? But we can provide a different dynamics first by communicating with our users before ever deciding you have to purchase or anything like that. Okay, so what I'm going to do, guys, is I'm going to break down. I used to work in oil and gas. I wasn't always a trader. I went back, re-educated, and did a degree in financial services. Didn't want to work in the banking system. Went and wrote my securities license, and then ended up taking a real big reality check about what trading is. If anybody in here struggled out the gates, heck, I've been there. We both know the pains involved in growing in this business, but it isn't permanent if you make a decision to change. My decision to change was based off of paying for advanced mentorships. I realized that this was my industry. I was passionate about it. I wanted to learn what I was doing wrong. I wanted to learn how to become more qualified to become good at something that I yet was struggling with, okay? That being said, what did I do? Well, I went and paid for advanced mentorship. Some of my educators were market makers on the floor. Some of them were money managers for institutions, managing big blocks. But even in those environments, they trade differently than a retail trader. So mentorship is great, but what happens a lot of times, traders pick bits and pieces of where they learn how to do certain concepts, and eventually you kind of graduate your way into an easier process that works for you. What we do is we provide a holistic approach around every aspect of trading, both non-directional and directional, and we bring order flow, supply and demand, volume profile, momentum, divergence, you name it. If you've seen strategies, we can integrate what we've done and enhance them by using the tools that we trade with, right? You might use moving averages and RSIs. Well, we can take order flow and we can enhance what you're doing with that. You might be a completely based price action trader using support and resistance. We can take supply and demand and volume profile, and we can add probability to your levels. There's just different ways to look at it, right? And why not want to increase the edge? That's the question I have, is if we have an opportunity to become more professional, more, I guess you would say, of a probable trader with an expected outcome that has more success than if you weren't using these tools, then we need to ask ourselves, why would we not want to engage in that, okay? So the biggest thing for me is I'm passionate about trading. And I think that in this business, we need to determine passion versus interest, because when we're passionate, we tend to go the extra mile. And so if you're somebody like me, then you're going to relate with how I communicate. You're going to relate with some of the things that I do, and you'll see the way I teach and the way I talk, because I'm passionate about you succeeding, not just about providing a bunch of links and a bunch of trade room stuff and all that mumbo jumbo. What we want to do is we want to get you in the trenches so that you can make these decisions on your own. And I think that's the benefit, right? I mean, if you can end your day feeling like, I'm so proud of where I've gotten because I'm no longer in that, you know, that struggling situation where I'm afraid to step into the office because I don't know how to make money in the market. I can't guarantee you're going to become a millionaire in the market. Nobody can. What I can assure you, though, is that our tools are going to make you much more of an efficient trader. That's without a doubt. Okay, so that being said, let's talk about making things easy, because we all know how to make things complicated. Trust me, I'm guilty of it, and especially in the market. So how many of you guys have ever looked at order flow and volume charts that look like this? Can you guys just give me a Y in the chat box? Both, Eddie. If you want to talk to me on the phone, I'll give you my phone number. Not a problem, and I own the business. And we've got thousands of traders all over the world, but there's always plenty of time to get on the phone and talk to traders. Why? Because most people want to be able to relate, right? So, and I love communicating with traders. Let's get back on topic. Okay. Order flow and volume. Top chart is an order flow chart. Volume, the volume chart is on the bottom. Can you guys give me a Y in the chat box so that I can see that if you guys have ever looked at charts like this? Anybody in here? I just want to know from an understanding, because a lot of traders, what happens is we start looking at the most complex stuff, not knowing that there's better ways to do this. And yes, we use these charts. We use volume charts. We use order flow charts in similar ways. Like, these are just examples. These are just examples of making things complicated. Now let me kind of explain how I look at this. And I'm going to grab a pen. This is an order flow chart. Okay, I'm going to put OF for order flow, and this is a volume profile chart. Okay, the difference between the two is one is looking at execution, okay, and the other one's looking at participation. Now, there's a time and a place where these have relevance, but what we've done is we've taken it one step further. Is we've basically taken data from different aspects of this, and instead of making ourselves feel like this guy, we do it in a way that's visually enhanced. And what do I mean by visually enhanced? We only really focus on the areas that make sense for us to focus on. Because if you're looking at a market, you could line 10 traders up in a room and you say, what do you see on one chart? And they're all going to give you 10 different answers. Where we need to get to is being able to everybody look at the chart and see, okay, there's an area of an imbalance in supply or demand. Now, what we've done is we've taken it to a much deeper level than this, okay? And I'm going to explain what these are. Fluorescent candles here and here, right there and right there, right here, okay? This is an area of a buy zone. This is an area of a sell zone. It gets so simple like this, guys, because ultimately, if we're going to make things simple, we want to make things simple quickly, because we could feel like this guy, or we can look at something much more visual and know that the internals of the software are doing all the hard stuff for us, okay? Because that's what software was designed for. It was designed for us to speed up the execution, speed up the analysis, so that we don't have to do it ourselves. And in fact, that's where the concept came for designing this. Is we, as a trader, I learned as a supply and demand trader a long time ago. And one of the things, I actually went through all the mentorship programs at the Online Trading Academy, and you know what? Great group of educators, great program. Problem with me is that I don't like to do things manually. I like to make the fast track the decisions so that I can become a better trader without having to second guess my own decision making. So if you're somebody that second guesses your decision making, it's because a lot of times you're relying on your own knowledge to do things that maybe not is where we need to be using that knowledge, right? Now, there's a time and a place for our interaction in trading, but it shouldn't be in the complex calculations of order flow and volume, I can assure you that. Okay, so let's kind of discuss that. If we were to buy a setup like this or sell a setup like that, do you think that it's easier to see these types of charts just by looking at them, or looking at these that were over here? I would assume it's the ones on the right. Okay. So let me kind of explain an overview of what this means, and I'm going to break these features down one by one. At the beginning in my title slide, I said I don't like fluff, snake oil, or subjectivity. One of the biggest things I don't like is I don't like industry jargon, because trading is about the hard right edge, not about talking about we need to buy low and sell high to make money. So what I need to do is I need to demonstrate why being a proactive trader is more important, because if I can't do that, then you'll never be able to understand what we do well. So when we say always leading, I don't mean the difference between leading and lagging analysis. What I mean is that you have the option to choose whether to be a reactive trader or a proactive trader. The best traders in the world know how to be proactive because they're not reacting to the market without a plan on the fly. If you're somebody that is reacting to a plan on the fly, it means that you haven't really built a trading system, or you don't have tools that are going to give you an edge, because you're always reacting to the markets jerking around and flipping and flopping, because that's unpredictable details. What we do is we use analysis to be able to project proactive decision making. Okay, so when we look at supply and demand, what we're doing is we're looking at areas in the market that are identified by not only order flow, but volume profile. And we look for breakouts in volume profile around and all that fun stuff, right? What we've also done is we've been able to go inside the areas of where we're interested in being a buyer or seller, and we can say, can we add a level of complexity, but done so in a way where we don't have to do the complexity ourselves. So what we're doing is we're taking zones in the market, okay, we're taking supply and demand in the market, and then what we do is we say, okay, we know we're an interested buyer in these areas, we know we're an interested seller. But if we're planning on getting into the market, is there a way for us to go even deeper into the onion, peeling off layer by layer and saying, okay, we know that the area is about 10, 15 ticks. Can we use volume to go in and reduce our stop size by 4 ticks? And then be able to understand that it's really about being a sniper, right? In fact, one of the analogies I like to use in the trading room is, if you think, if any of you guys are familiar with the military, or, different sects inside of the military, a sniper's job is to not run around like the front line. A sniper's job is to sit there on the top of the mountain, be extremely patient, and then when his patience prevails, he's got the kill shot, right? He's got his target in sight for a long time. And as soon as the opportunity gives him that chance, he's able to execute his decision-making with a lot of accuracy. The goal here is to be able to take really high probability details, go in with a deeper level of analysis to be able to say, I can show you to the tick where the market's supposed to go with a very, very high degree of certainty. Now, I'm not saying I can guarantee it's going to work every time, but I'm going to say that there's no guarantees in trading. If we're looking for them, we're in the wrong business. But I can assure you this, that in advance, I can tell you with a very high degree of accuracy where we can expect the market to reverse, where we can expect it to react. Why? Because not only are we looking at order flow, but we're able to look at volume. And when volume can support that order flow decision, we should be able to know where the market's going to accept trade or where it's going to reject it. And that's one of the best things about the SD volume zones. And I'm going to show you how simple it can be, because you can do this on daily charts, weekly charts, stocks, futures, Forex, you name it. Now, let me kind of go one layer deeper in the onion, okay? Thrust bars was a design concept that we did to be able to give you the heads up. In trading, there's a lot of things called alerts or email notifications, or maybe you've got a little audio symbol that flips on your screen saying, get ready, there's a trade happening, right? We have it built into the price bars. So before you get ready to get into a trade, we have volume that's running an algorithm inside of the candles, so that when we're in the middle of breaking out based off order flow or volume, or when we're in an environment where we have the opportunity to see that the market's going to give us an opportunity to trade it, we have the colors highlight fluorescent colors so that you can actually get ready to participate or get ready to plan the trade, okay? So like I said, if you're trying to define your application, don't, because our software was designed for you in mind. Okay, and we're going to look at many different time frames, many different charts in a second. So the question here is, if you're trading, do you have tools that give you a very high degree of probability of telling you where you can expect the market to react? And the reason I ask this is we could package everything up and just say, trust this zone, or trust this buy zone, or trust this sell zone. Just because I say it's going to work, you should trust that. To me, I think that's arrogant. I don't think that anybody should ever listen to anybody when they say, well, just trust me, I use it myself. To me, I'd rather show you why it's working and explain why we would want to adapt a belief around how it works, because the market, there's no secret to the financial markets, guys. let me get this out of the way. There's institutions and funds, and then there's us. Okay? Let me kind of explain this for a second. We don't matter in the financial markets. We really don't. They matter because they are the market. So if we're worrying about we're competing against the hedge funds, or if we're worrying about, oh, we got to compete against the HFTs or the algos and all that stuff, you're going to drive yourself crazy because it doesn't matter. There's no competition. These guys are the market. The only reason we can exist in the market is because they create it. So the moment we accept that, the moment we can start focusing on what we're able to do versus what everybody else is doing. And that's where we take ownership about our trade plans and the tools that we use. It was a really hard decision for me when I started trading to say, you know what, I just spent $20,000 on education, and I'm going to say, you know what, I'm going to do things a different way because I'm realizing there's a better way to do it. That's a humbling experience, is to be willing to let go of everything that you've done before that's not working for you and keep an open mind to somebody else that might have a better prospect or a better concept of something that could change the rest of your trading career for the rest of your life. Okay, let me go into detail. This zone is a supply zone. Now we know that from this area to this area is a sell area, but the question becomes is how do we know that the market's going to react there in advance? Because remember, at the close of this bar, and I don't know if I explained this and we'll do this on the next slide, at the close of this bar, this fluorescent bar, this is what we call a thrust candle right here. At the close of that bar right there, this entire zone is projected to the hard right edge, all the way across the chart. So remember, all of this that's happened down here isn't even there yet, okay? I'm gonna remove that. So here's what's important. As the market comes out of this area and trades down, this zone is still here. As the market closes on that bar right there, this zone is created, this buy zone. So as the market trades all the way up, we have the ability to see this is about to happen way before that takes place. Now let me make a very bold statement here for a second, traders, because there's many types of zones you can buy online. Heck, if you want a bunch of free stuff, I could just send it to you on my personal email, because I'll tell you what we did when we designed this. It took a year to design the algo inside of this, because what it is it's not just zones created off market structure, highs and lows. If you've ever seen support and resistance zoning software before, what it's doing is it's just taking swing point analysis, and what it does is it basically just operates off of structure. That is support and resistance. There's a big difference between support and resistance and supply and demand in its true form. Okay, so why am I doing this in terms of identifying this slide and circling these points? Because there's a difference between a professional trader, okay, a professional meaning a business owner, versus, okay, a novice. Now, let me just kind of explain this. Professional doesn't mean they're better than us in terms of they're better people or they deserve to be more successful. A professional just means that they have done the work, and basically what they've done is they've basically learned, okay, how the market operates. A novice, okay, has the same intentions as the professional. With the same respect to, they deserve just as much of an opportunity to succeed as the professional. Where the novice needs to realize is what professionals do differently than the novice, okay? And so what we got to do here, guys, is we need to decide, do you want to remain a novice or do you want to remain a professional, okay? Because I'll tell you what, if you're not able to make the decision that you don't want to stay here anymore and your trading results will dictate where you're at, let's get you over here. And the best way to do that is to explain, who do you think is selling right here? And who do you think is buying right here? Because I'm going to tell you what might not be a comfortable reality is that in order for us to be a professional seller, when we short the market, we're selling in the open market. So somebody has to buy from a seller to create a trade, right? If we're going to sell the market, we need to have a willing buyer. Well, guess who we're selling against up here, guys? We're selling against the novice, because novice traders are going to take the opposing side of professional traders all the time. And it's not that we have to feel bad for them, it's just the business. And in reality, who do you think is selling down here? If you're selling down here, you're in trouble, because you don't know this is going to happen yet. But I can assure you this, professionals can identify with a high degree of accuracy why the market stopped right there to the tick. And I'm going to talk about that here and when we get into the charts. Because if I can teach you one thing by using our software, if I can really just teach you one thing, it's to identify in advance where the market's going to do something before it happens, and being able to show you that it works over and over and over again. Okay, so I got a question here. I need level 2 market data subscription in order to use your software. No. What's cool about this is it's not using level 2, it's using volume profile data through uptick, downtick distribution so that we could make it compatible with Bloodhound. Yes. It says, what kind of historical data do I need? I'm a Shark Indicators owner. This software is made compatible with Bloodhound, and if you're a Bloodhound owner, we already built Bloodhound strategy templates for this. So the cool part is that when you decide to purchase this tool, it comes with a whole bunch of pre-configured Bloodhound strategy templates that you can build upon as a pro added bonus. Okay, because Shark Indicators is actually one of our partners. So ultimately, as a sister partner of ours, we built over and above resources for you as a trader. So we'll get into more details after, okay? So let's fast track. If we're going to break this down step by step, the first thing that happens is you're going to see a black candle. So that's step 1, okay? Step 1 right here, right? There's a black candle, okay? And then we got a black candle right here. Okay, let's break this down in an execution strategy. Step 2 is we're going to get a thrust bar after that black candle. So this candle right here, okay, that's step 2. Now we'll go this one here, that right there, that's step 2. Okay. You can't use it on Thinkorswim. It's not advanced enough in terms of the code base. So our software only works on Ninja at this time, mainly because of the requirements that's used on custom graphics as well as order flow integration. It's not that we don't want to make it compatible with other platforms, is that there's a lot of restrictions based off how those platforms are created that do not allow tools like this to work. It could be done, it's just we haven't got there yet, but we will eventually get to these other platforms. It's just a matter of knowing what can and cannot be done over time. So that's one of the benefits earlier, Eddie, as we talked about. If you want to use this analysis, if you're an options trader, equities, Forex, futures, you can use the demo of Ninja to run our software. It'll work the same in a simulated environment, and you can place your trades on other platforms. I know that's a second stage process, but it's the best we can offer at this time, mainly because if you're wanting to use certain advanced tools, you can only use them on certain platforms. My thoughts on that is if we have the ability to use the best of the best, why not use it, even if we're using other platforms? Okay, I've got guys in my trade room that trade through TradeStation, and yet they run Ninja charts for their analysis. Okay, so what happens in step 2 is these thrust bars go up and down, right? So right here, these are moving up and down. At the formation of these bars, they're going to highlight fluorescent green, fluorescent red, okay? And the reason these are highlighted fluorescent is because ultimately what's going to happen is that's telling you inside the order flow, inside the volume profile, at that exact bar, we're confirming volume profile breakouts, okay? And we're also confirming that it's breaking out with volume with regards to where we're trading at that time. So here's what's really neat, okay? What's really neat, I'm going to change the cursor color here so you guys can see this. Let's go into the ink color, make it easier to see. At the close of this bar right here, and at the close of that bar, this zone prints, and that zone prints. But here's the benefit. Let's use the one on the bottom. Price trades up all the way up to the wick. We have all this time to go down and say, you know what? Let's start planning this trade right here. Let's start planning the long in the market. Because we have 1, 2, 3, 4 price bars before price came back into the level. And what's really, really important is I'm going to talk to you about how to see this in the charts here in just a moment. There's a reason why price only went 2 ticks into the zone. right here, 1, 2, because I'm going to teach you just, if you leave here today with the best golden nugget of the day, I'll tell you right now, it's how to use low volume to identify where the market's going to reject price. Sometimes I get traders asking all the time is, why do you share so much valuable details on how to see the market? Why don't you keep this stuff to yourself? And I learned very early on in life, not just in business, that you can't keep what you have unless you give it away. So in other words, is the more people that I can make successful in here, the better off I'm going to be in terms of keeping the knowledge fresh in my brain. By educating and running the room, it keeps me as a better trader, keeps me on my game. Okay, so with that being said, guys, let's go into the volume. Every zone, okay, this is a supply zone, right? Supply zone. This is a demand zone. But these are an SDV. So this is not just supply and demand. This is a supply, demand, volume zone. Supply, demand, volume zone. Why are we doing this? Because supply and demand on its own is based off order flow and price. So if we have supply and demand equals order flow plus price, where's the volume in here? Wait a second, where's the volume? There is none if you just look at supply and demand by itself. And no, there's a lot of good traders. Let's rehash this. I'm not saying you can't make money as a trader just looking at supply and demand by itself. But what I can assure you this is that if you're able to use volume to fine tune the accuracy of supply and demand, you are now at the top echelon of what I like to say a high level trader. Because what you're able to do is you're able to put yourself into a completely different realm of market context that gives you the ability to look deep inside the data to the tick. There's a reason why price reacted so strongly on this wick. Do you see right here? It just slammed that doji bar down. Look at the wicks in here. This is telling a story. But what's most importantly is, what's the volume doing? This is a low volume area. The market does not stay in low volume areas. So if you're going to take a trade to go short, do you want to be in the trade and the market sits there forever and drives you nuts, white knuckling it? I hope the trade goes in my favor. I hope it goes in, oh my God, it's going against me. Oh, okay, it's going in my favor. Or would you rather identify that, hey, wait a second, I've got an area of 10 ticks from here to here. I'm going to put my sell order in here, which puts my stop loss at 4 ticks. And really, if we get up here, we're not going to stay there that long because we're in the best place to be getting into that trade. That's, my friends, how you get the crosshairs out and you open up the onion and you say, there's my kill shot. Well, all the newer traders put their orders down here, realizing that, yeah, okay, the trade works. You're sitting up here saying, in due time, young grasshopper, in due time. Okay? Does that make sense, guys? Just give me a why. Give me a why in here if you guys understand why we go into such detail on this, okay? Markets are moving right now. Interesting. Okay. Let's open up crude oil. Let's go back here. Okay. I'm going to put market structure on. Here's the cool part. Okay. What we've done is we've decided if we're going to use this, I run 14 charts in my trading room. I have 7 monitors that look at the markets, and I have 1 monitor designated to the conference room as well as my emails. Okay. So what's really important here is that if we're looking at so much details, what do you think is the most important part of using tools? User-friendly interface. Why is that? Because if we're fumbling with technology, then we're definitely fumbling with decision making. And if we fumble with decision making, it's a recipe for disaster in the market. if you're an active trader, this will make sense to you. If you're somebody that's still testing the waters and you're, you know, okay, I think I'm into trading and all this stuff, right? There's nothing wrong with that. You're going to find that you're going to get to a point where it's like, okay, I got to make a decision here. I'm either going to be interested in trading or I'm going to become a trader. That's a decision we have to make. And it doesn't mean you have to be a scalper. It just means you need to make that decision. Well, if you're going to make that decision, tools where we can, with one click, control multi-time frame analysis, look at market structure, look at Fibonacci through the curve, look at custom graphics around volume. Everything is manipulated in a drop-down menu so that you're not having to add 5 indicators on your charts to do what normally we can do with one click. Okay, so where we can add the value is that we've already taken years of design and put features in here that if I wanted to use this time frame, and let's say we're looking at a 10-tick range bar, that might be completely microscopic to you. That's okay. If you're somebody that is on a weekly chart, we can look at a weekly chart in just a moment, but the concept is the same, right? If I wanted to, I could take this 10 range chart, go and add a 15-minute zone to it. Let's go back and add the data. I got to add data here. Let's do this, and we'll go and we'll add 15 days. Might not have that much data for crude oil. Give me 1 second, guys. Let's do a 5-minute chart. Might not have the data downloaded for crude. I didn't download it for crude. So give me a sec. Let's go back to the default chart. Okay. So let's do this. Okay. Let's keep it simple, and we'll go through it bar by bar first. And then what we can do is we can pull that data from. I had to download the data, and I didn't download it. So that was a mistake on my part. But nonetheless, guys, let's move on. Okay. So let me kind of explain the difference between proactive and reactive trading. The first thing we want to do, okay, and let me just kind of grab a cursor here and we'll draw a pen. Step 1, okay, is we want to pick direction. And I'll grab, actually, I'm going to grab a slide. It's easier for that. Okay, and I'm going to walk you through a plan that is so simple that it doesn't matter whether you're trading on a day trading time frame or you're trading on a bigger picture. The same plan is in place. You need to know the first thing, and this is that mini trading plan I was talking about. Are you going to take a directional strategy or a non-directional strategy? There's only 2 ways to trade the market, with it or against it. One way you're trading either momentum and trend, the other one you're fading reversals. There's no other way in which you can trade. Now you could trade reversals in the direction of a trend, and that's what I'm going to show you how to do right here. Okay, because take a look. Would you say just based off price action, if anybody here knows what a standard trend is, okay? Yeah, absolutely. Yes, it says, is it possible to plot minute zones on range charts? Yes, it is. Absolutely. And that's what the multi-time frame feature was, which is why I had to download the data. Yeah, not a problem. So give me 1 second here, Renee. Not a problem, because I think we started about 10 minutes after, but what I'll do is we'll go in here and we'll get it done quick. Okay. So what I'm going to do here is I'm going to explain how we have a directional bias, okay, and we want to pick the direction. Well, we need to identify permissive action, which is where is the zone to get into the market. The other thing too is what is our trigger and how do we manage the trade? Well, let me kind of walk you through that. I would take a screenshot. If you have the ability to right now, take a screenshot of that. And if you don't catch that, come to the trade room in the morning. What I'm going to do is I'm going to say a proactive trader, okay, is able to start with the previous area, okay, and say, okay, this is my area where I want to get long the market, just like this. And so at the close of this price bar, as the market's trading up and down, what we're able to do is we're able to say, okay, there's my buy area. Stop loss goes a couple ticks below the zone just to protect the buffer. And now what we've done is we've given ourselves the opportunity to always cap our risk. There's 1-to-1 no matter what, because now our risk is capped based off the area. You can plan money management around that. You can plan areas of if you're a 2-to-1 trader, well, then you're going to basically make sure that your reward potential is here. but at least you can know what 2 to 1 is or 3 to 1 if you're going to be looking at capping your risk. But here's the golden nugget for the day. And this is what you're going to find in our trading room when we talk about this, okay, is that we've got a profile in here that identifies low volume. And I'm going to just grab the arrow here and I'm going to explain what that looks like right there. Okay, right there. So if you look to the left, you're going to see that if I go in here and I go to profile features, I can extend those out. Those are what we call low volume nodes. And what low volume nodes tell you in the market is if the market gets here, it shouldn't stay there. Not by definition of what an auction is. An auction in the market tells us that in a high volume areas, the market facilitates trade. In low volume areas, the market does not. So in low volume areas, we should expect what? No trading to take place. See what happened here? Once it came down here, order flow is absorbed, and you'll also see that this was, you can identify, you can turn 2 or 3 on. I have only 2. You could turn 3. This would have picked up a third low volume node, that little value in the volume. So here's the key, guys. Instead of putting your stop loss at a full size risk profile, you've now just cut your stop down 3 ticks, possibly giving an opportunity to trade a little bit more size, or at least cutting your size down. Okay. This is daily chart of the QQQs. Let me show you this real quick. If you're an investor, if you're a swing trader, it doesn't get more specific than that. Today's candle, by the way, guys, the market opened here. You see that? Where did it stop? This is important. Where did it stop? Low volume. If you're an investor or an options trader, that's how you plan your execution. If we go in here, we can turn all the other features. I mean, there's a copious amount of features in here, guys. Look at this. Do you see here? This green thrust candle at the close of that bar, that was the end of a trading day. The market opened up, traded down. Where did it stop? The edge of the zone on low volume. And then it gapped up the next day. This is if you're a swing trader, directionally planning your zones in advance. Look at right here. This zone was created. As soon as price came into it the next day, where did it stop? It stopped on the first blue line. Now, the reason I'm going into so much detail is because if you're going to use anything in trading, RSI, CCI, MACDs, Bollinger Bands, all these things that are available to us as traders, look at using it in conjunction with something that gives you data that is not available to the naked eye. Meaning there's no way we can process volume in imbalance zones like this manually. Even if you only use this and all of your other indicators, you're going to put yourself light years ahead. Look at, if you're a Forex trader, let's take off fresh zones for a second so you can see just where the setups were. Take a look. If you're a scalper and you're trading the Forex market on a 5-tick bar, what happened? It came in. It came into the first blue level, low volume. Where did this one stop? This one right here stopped right at low volume. That's a 2-tick level of accuracy, guys. Okay, so I'm going to pull up a slide, and we're gonna close the presentation off with this, guys. Okay, and I'm going to put a link in the chat box. If Renee, give me 1 second, I'll end here very quickly. I appreciate you giving me a few extra minutes. I know we started a few minutes late, but we have data in here that'll actually tell you the measurement of volume. average measurement, if we put the volume values, profile features, volume values on, there's the data for the volume and the levels. It's just we can only pick and choose what we choose to present in here, because ultimately what happens is we do run out of time a bit, and we have so much to share. And that's the benefit of being on the back end with what we do. Let me just grab this. Okay. So here's what we're going to do, guys. I'm going to grab this and I'm going to explain what comes with the software when we use it. Okay. We are running on Ninja 8. It is being coded as we speak. Okay, so one of the best things about what we do, and I'm just going to put a link in the chat box here, guys. Give me 1 second. I just want to run here and put it in there for you. There's a link. Actually, no, don't click on that link. Let me give you another one here, guys. Give me 1 second, because I have to make sure it gives you the right one. Right here. Let's do this. Copy link. I'm going to put a link in the chat box, okay? So the link, can you guys give me a Y if you see it? We sell the software at $1,500 a license because it's one of the most advanced supply and demand volume software in the business. Okay. The difference here is that we'll give you 2 PC licenses, so you're able to use it on a backup or a regular computer. It comes with usage and settings videos, detailed manuals on the software, and we give you, if you're using Bloodhound, I know there's a couple questions in here. Bloodhound is building and testing systems. Our software is compatible with it. But here's the benefit. We don't charge at this time for subscriptions to our trading room. In fact, the only way you can get a pass is by coming in on a 2-day pass. And then what happens is, if you're going to come in, the only way you're actually able to be a member of our trading room is if you're in our mastery programs, using all of our software as a complete package. What I've decided to do is, if you're interested and you just want to learn the supply and demand concepts for now, what we'll do is I'll give you a month free in our trading room. So every week you can come in there just using supply and demand. You may not even be a day trader, but at least you'll learn the concepts of the details that we're discussing. And what it's going to do is it's going to, do you guys see the link here? Let me see here. I'm going to basically, can everybody see the link? Just give me a Y in the chat box, Renee. I don't know if you can see it there. I know a couple of people saying there's no link. Send all. Yeah, I've got it there. It went through, so I believe, Eddie, you got it. So here's the reality, okay? We don't charge for updates. We're rolling it out to Ninja 8 very soon. So when it's done, we just give you a new installer, okay? But most importantly, guys, just do yourself a favor and just join us tomorrow. Because here's the cool part. All you need to do is just come in and listen to professional traders break it down in real markets, because order flow and volume can be a complex situation. We're going to make it easy, okay? Let me see. Steve says my presentation is around 30 minutes, and it's not a problem, guys. So here's the reality, guys. I'm finished. I want to thank you guys for letting me be here. Most importantly, I hope you enjoy the next presenter. I'm sure he's got lots of great knowledge to share. Just let me know if you guys have questions. You can head us out there. We got some free indicators, software, trade videos, you name it, as does everybody. But I can tell you this, if you're interested in order flow and volume, you come to the right event. Okay, so God bless traders. Have a great evening with friends and family, and I look forward to trading with you in the near future.